When you are starting out in the financial market as a complete beginner, especially the crypto space, understanding candlesticks and how they affect price movement is very fundamental and is very important to your journey to becoming a professional trader or professional cryptocurrency trader. So in this video, I'm going to go deep into the core basics of candlesticks, how they affect price movement, what are the information that are captured in every single candlestick that is printed on a chart. Candlesticks have a lot of data captured in them, and that is exactly why I want to explain what candlesticks are for you as a beginner, so that you'll be able to make informed decisions whenever you're trading in the financial markets. If you're joining us for the first time, this is actually the fourth video of the Mastering Binance Futures Trading course I have specifically created for beginners. When you check the internet, information about the futures trading is somehow hard to come by, and that is why I'm taking time to help you understand how the futures market operates. I'm taking you step by step so that you will get every single detail and information. And by the end of this particular course, I expect that every single one of you that have gone through this course is able to single-handedly interpret a chart, take an analysis, and then execute a trade to a profitable level. I will be sharing my screen right away with you to show you how candlesticks are formed, what are the information captured in every single candlestick. So do well to hit the subscribe button if you have not subscribed, and then make sure you share this video with your friends, and then also do well to hit the like button, because this will go a long way to make this video go further to many other people. So let's get right into it without further ado. Alright, welcome here everyone. So to understand the basics of candlesticks, I decided to create this sketch so that I will be able to explain everything about the candlestick for you. So the candlestick is a popular concept that is known as the Japanese candlestick, and it is an attempt to condense every data and information in a particular time frame of price movement in form of a candle. So to understand what candlesticks are, you need to view it like a calendar. Let's take, for example, you have a calendar. A calendar has a year, and a year is broken down to months. Months are broken down to weeks, and weeks are broken down to days. Days are broken down to hours. Hours are broken down to minutes. Minutes are broken down to seconds. So this is basically what candlesticks are trying to solve. Just trying to condense a bulky data into a fragmented form of data for you to be able to understand price movement. And this is done for you to be able to know how price is moving, how the algorithm is behaving, so that you will do your analysis properly. So when you come to candlesticks, you have right here the bullish candlestick and the bearish candlestick. The color does not matter, because everyone decides to use the color that suits them. Some people use the white color for the bullish movement, and then some people use black color for the bearish movement. I think my mentor once told me that the concept of bullish and the bearish candlestick comes with the nature of the fight of a bear and a bull. When a bull wants to attack you, they attack you with their horns, and then when a bear wants to attack you, it attacks you from up down. So I don't know how true is that. So basically, I will show you the anatomy of the candlestick and how you should use it to be able to understand the movement of the market price algorithm and every single detail you are having in the market. So right here, I'm using the green for bullish candlestick and then the red for bearish candlestick. So this is the body. As you can see, I've already tagged everything right here. And then when a market starts, or when a candle starts, it starts at a zero position. As you can see, this is the open, and then when it moves down to some point and then pushes up and then closes above where it opened, you have the open, you have the close. We say to have a bullish candle, that means the market is in a buy market, or the price of that asset has increased within that time frame. And then you cannot understand candlesticks if you don't know how time frames operate. I will subsequently talk to you about time frames in the other videos that I will be making, but basically here you are seeing every single information is condensed in the form of a candle. Right here, if this is a 1 minute candle, 2 minute candle, it doesn't matter. Every candle is a representation of the price movement within that particular time frame. So if this is a daily candle, it means in the whole of that day there is an increase in the price of that particular asset. So right up here you can see high and then low. So usually when a candle opens, it will either push up or push down, and then when it is pushing down, it will start changing color. Since I'm using red as bearish, it will start showing red, and then if it reaches a certain level and then it could not go down again and then start pushing up and came back to that point that it opened and then started moving up, it changes color completely. I will show you exactly. And then this particular black line you see is known as the wick. So this is just like your candlestick, then you have the wick. I will show you practically how these candlesticks are in a chart, and I will show you how they are formed in a live market. Looking right here, we have the open and then the price move down. If a price close below the open, we say to have a bearish candlestick. So this is basically the anatomy of the candlestick. We have the high of that candle, we have the low of that candle. So how does a candlestick form? Let me show you practically right here. So let's take, for example, price open right here, and then at that moment it is at 0. Then the price starts moving down. You begin to see it printing in the red because we are dealing with a bearish movement now. At a point, if the pressure is no longer strong to push it down, it changes direction and starts moving up, right? It starts moving up. And then right when it comes here, it starts moving, and then the color will definitely change from this time around. It changes to green. And this is when we have a bullish movement as it turns up. But right at this moment, remember we pushed down first to this level and then we changed direction. So this particular wick is created because price moved down to this level before it started moving up. So at this point, if the market reaches this level and then pushes down again and then closes right at this point, we'll have a wick right up here. Let me take this one up a bit. So we'll have a wick right where the price reached and then came down. So this is how this kind of candlesticks are formed. Then this particular candlestick, depending on the time frame, if it is a daily time frame, that means we have different other candlesticks within it, engulfed in it. So if you break this down into 4 hours, if you break it down into 1 hour 15 minutes, you will have different candlesticks. I will show you practically in a sketchy way how you can see these things, then you'll be able to know how exactly to use them. So when we go to the trading view or a live market, let me show you how a candle forms. Right here, this is a live market. I want to zoom it up. Let me take it up a bit. Let me take it to this level so that you will see exactly what I'm saying. So let me change the time frame to 1 minute. So this candle just opened right here, and you can see at this moment we are bearish. The last candle that just printed is red, and it's showing that the market is bearish. Look at this. Let me increase it a bit so that you will see we just have 24 seconds, and then we are looking at it. It opened. We'll wait for it to open another candle, and then we close it again. Let's watch it up. Just be watching it, guys. We are watching it. It's going. We have just 9 seconds. We have 8 seconds. We have 5 seconds, 4 seconds, 3, 2, 1. And now a new candle just opened. Right here, you can see that the movement, it's pushing. I just want you to see how these candles are formed. So basically, this is how candlesticks are formed regardless of the time frame. So if you go to 1 hour, you will see it. The candle will finish forming after 1 hour. If you go to 2 minutes, let me change this to different currency, whether USDT, let's say, whether BTC, USDT, depending on the time frame, whatever you are having right here, it doesn't matter. You always have the same price movement. So this is actually how a candlestick forms, regardless of the time frame, regardless of where you're viewing it from. So let me show you something about time frame and candlesticks so that you'll be able to understand exactly what I mean by this. So now remember that our candlestick that we just printed, let me just show you right here. Let me just create something like a candle. I'm going to sketch right here so that you will see every single detail to be able to understand how candlesticks operate. Remember, I told you, dealing with the candlestick trading, there are a lot of information out there that is just garbage, and I don't want you to waste your time knowing about that, because in this course we are going to go through every single detail to be able to understand how candlesticks. I'll show you a little of how the candlestick patterns operate, but candlesticks in themselves does not make you a successful and a professional trader. You can use candlestick with other auxiliary information so that you become a professional trader, but you cannot use candlestick alone to say you want to become professional in all your dealings. So let me reduce this a bit so that I will show you. We have the wick right up here, remember. Now if this is a daily candlestick, let's say a daily candlestick, okay, pardon my drawing, if this is a daily candlestick, what this is saying is that if you zoom this down to lower time frame, you have something like this. You have something like this, price open, then it pushed down, reaches this level, and then pushed up again to this level, came down, and then closes at this level. So this in lower time frame, this is exactly what you're going to see. If you break this down, this is the open, this is the close, this is the high, this is the low of that particular candle. If this is a daily candlestick, because this the movement within this particular data. That is why I told you a candlestick is just a data that is condensed and compressed in just one item known as the candlestick. So let me show you a practical example. Let's go back to our chart so that I will show you. If you come here and then go to daily time frame, this is daily time frame. Let me show you exactly what I meant by that. Let me reduce this and then reduce the size. For example, now look at this. Let's take one candlestick just like the one we just used. Look at this particular candle, bearish, right? Either way, because the one I used for sketching, I used a bullish candlestick. If I used a bearish candlestick, let me change the color to a red color. This is almost the same thing. Let me check it right here. We have the tail, that is our wick. We have the body right here. Let me just color it inside so that you will see everything in detail. So right here you can see price open at this level. So we have price open, then we moved up, came down again, then move up again, and then close at this level. Open, we have the high of that candle, we have the low, and then we have the close. Remember we said when price closes below the open, we have bearish, and then when price closes above, look at this is close, right? This is close. Here we have C above O, here we have O below C. Remember, this is how we understand a bearish movement or a bullish movement. So coming back right here, if we take this particular candle for the bearish movement, for example, let me just color it. Let me just mark that level and then check it to yellow. Okay, so if I zoom this down to, let's give it to 1 hour, you will see exactly what I'm saying. Let me take it back a bit so that you will see what that is doing to your candlestick reading. Let me zoom it in. It's right back here. Okay, now look at this. Let me bring it right here. Remember that our sketch, I will not have the luxury of doing a lot of things here, but remember we have open, it moved up, came down, right? Give it this, and then it closes right here. So this is basically how you understand this when you break them down to a smaller level. So when you are dealing with candlesticks, it's not just you trading doji, you trading, you know, bullish pattern, bullish engulfing pattern, a piercing line, or on all those grave limestone. Not all the terminologies. Understand how price movement is, how the algorithm is tweaked, so that you'll be able to know exactly what that is. So every time you are seeing a candle, you know exactly what it meant. You know exactly what that particular candle is. And then when you have a candle that is like this, it opens like this, and then it gave a body, this body, right? You have a body here, then you have a tail small. This is just giving you an instant. This is just giving you something to think about. Let me delete this so that you have a better understanding of what I'm trying to achieve. So if I delete this, let me sketch this particular candle. This video will take long because I want to help you understand what candlesticks are actually telling you in the live market. So remember right here, we have price open, and then it shoot up, then came down, and then came back again, closes like this. So we have open. Remember I told you O is above C. We have a bearish movement. So this, if you zoom this down, if this is a daily time frame, if you zoom this particular candlestick down to like 1 hour or 15 minutes, you will see it something like this. This is basically a price movement. Remember, if you are doing price pattern, remember this is a resistance level, so you are expecting price to bounce here. So whenever you're seeing a candlestick, it's not just the gravestone, you know, it's not just the doji, it's not just the hanging man, shooting star. You need to understand the basics of what is in the inside of the candle. So I hope you're getting knowledge and value in this. So when you zoom this down, let's go back to our chart. I want to take a little bit time. I will keep making videos, guys. Make sure you subscribe, because I want to make sure that you get all the detail about crypto trading and how to use price action to know how to take trades. I am obsessed in helping you understand how these things work. So let's go back to our daily time frame. I hope this gives us time to be able to do that. Can't find the charts. Okay, these are where the charts are. So basically, when you go to your chart and zoom these, you'll be able to see something like this, and then you make your decisions based on that. So how about candlesticks patterns, and then how do they affect the live market? Okay, so I'll refer you to a material that will help you for candlesticks patterns. You can go to Baby Pips. Baby Pips is a very, very good place for you to learn about candlesticks. You can see different terms. I don't use this because when I started trading, I actually followed some of these, you know, cliche, trying to understand or trying to trade with this white mabuzo, white doji, whatever the kind of, you know, terminologies that are there. But all these things, they work, but not exactly the way people thought it's working. So looking at this now, look at this bullish. Look at this inverted hammer. Now, one of the most popular of this particular, you know, candlestick patterns is this particular candlestick. Let me show you. Let me just show you from the example we did, and I will show you why these candlesticks patterns will work based on the knowledge you have. Like an inverted hammer. This is an inverted hammer. An inverted hammer is a bullish candle, but this time around it has a long head. It has a long head, and then it has a small tail. So when you go down to that our sketch, let's sketch an inverted hammer. It's a bullish candle. It is green. Remember, it is a bullish candle. That means we are expecting a green candle. Then it has a small tail. This is an inverted hammer. So if you don't know how these things operate, whenever you see an inverted hammer like this, you are expecting price to go bullish. Why? Because remember we said price open at this level, right? It moved down a bit and then took up to this level, and then came down and closes at this level. If you are a professional trader, you should expect that at this level, price is hitting a support level, and after a support level, what do you expect? You expect market to go up. After hitting this level, you expect market to push up. Opposite is the case when you have a movement like this. You have something like this, and then this is a hammer. You know, this is supposed to be red. This is supposed to be red, but I'm using this color because I don't want to waste time. So market opens at this level, right? It moved up a bit and then came down, pushed down, closes at this level. This is a resistance level. At this level, market will bounce and then start going down. So this is the same reason why these candlesticks patterns are working for people. I hope you're getting value from everything I'm sharing right here. So whenever you want to trade, you don't just trade arbitrarily or without knowledge of how these things operate. This is exactly why traders trade, why they understand. So when you go back to the chart, you don't just trade because you want to trade. You know exactly what candlestick is saying. Okay, now let me show you an inverted hammer in this market right here. When you bring this down, remember you must have a downtrend. Okay, a price that is moving down, and then when you have an inverted hammer, look at inverted hammer right here. Look at inverted hammer right here. Even though this is not like a big one, we have an inverted hammer here, and then we have a price moved up. Let me look for a hammer and then I will show you. Okay, here is something like a hammer. We have a down move and then we have it pushed up. We have a hammer right here. Remember, a hammer is when we have price moving down and then we have a rejection and then it starts pushing up a bit. So this is basically how to spot these particular candlesticks patterns in the live market. Go ahead and go to Baby Pips. You go to Baby Pips. The name is Baby Pips. Please go there and then search for candlesticks patterns. You have many of them. This is just the beginner tutorial. Babypips.com. Babypips, BABYPIPS.com. So this is the basics of candlesticks, guys. I hope this video is well explained for the beginner. If you like this video, guys, go ahead and tell me in the comment, and make sure you share this particular video with your friends. In the next video, I will show you how to use TradingView, and then we go further until you get to a level of mastery in understanding the futures market. Guys, thank you very much for watching. Stay tuned for more updates. Make sure you click the video that is displayed right now on your screen. Thank you, guys. See you in another video.